You want to give the listeners at home why it's better to sell the higher cost base first? For me, if I'm looking at this, you bought 140, so you sold the 140 stock, but you're also long 120 stock and you sold it above 150. Now, why didn't you sell the 120 stock? Because that seems like you're going to make you lock in more of a gain. What's your reasoning behind selling the stock you bought from a higher price and locking in less gains?
Yeah, it just gives me the opportunity where if and when this name pulls back, I'm not as overly, I don't care as much because I have that much of a bigger cushion in the name where if this thing pulls back to 140, I can still just buy back the 140 stock and still keep my good core. But if I sell that core from 120, yes, I lock in that bigger gain initially. But now if this thing pulls down to 130 and I'm losing in the position with the higher cost basis I have left, now I lose money in that trade and it just ends up, doing more harm than good. So I would, with the winners or any trade, I try to sell the most expensive stock first to get rid of kind of the lowest risk reward position to free up that cash first and then keep that winner, just like your DHR from 100, like if you were trading it, like I bought it through 220 and I sold it at, let me pull it up really quick. Like I sold DHR at 250 in that same trade. If I had your same $100 stock, I wouldn't care about the little pullback if my cost basis was 100 or my cost basis was 220. I was keeping a much closer eye on it. So that's why I typically sell the higher cost position.
And secondly,
first.
as we're always playing the tax game, you're gonna get taxed on a higher basis on short-term gains, no matter what. So if you can sell this stock and make 20 points instead of locking in the gain for 40 points, you're only getting taxed on the 20 points, and you want to keep that. You want to keep the long-term gains as long as you can.
100%.